stay. It's like love for the first time. It'll all make sense. You know it. It's like love in your soul. Feel it in your veins. In your lungs will stay.
Hello all, and welcome to our session on Fintech Startup Ecosystems, entitled Increasing Investments, Collaboration and Innovation in Fintech. I'm Michael Brown. I'm the Deputy Consul General here in Mumbai, India's financial capital and the maximum city. Fintech has witnessed rapid growth in Australia, with over 700 Fintech companies registered and darlings such as Afterpay developing the market and expanding overseas. In India, Fintech has exploded, with pull factors such as the prevalence of affordable smartphones and the widespread penetration of the internet. These marry very nicely with push factors such as the Indian government's demonetization policy in 2016 and, of course, the COVID pandemic. Both with exciting and energetic fintech sectors, Australia and India form a natural partnership. To guide discussion on such a fascinating and dynamic topic, we have our own dynamic moderator, the producer at Elliot Hasty. Elliot has been following the startup and finance space as a journalist for a number of years and has worked in both TV and print media. He currently produces the Startup Daily Show and a program focused on markets, The Pulse. Ausbiz TV is Australia's leading provider of on-demand video and the latest news in Australian markets, economy, business and startups. For those interested in the Australian market, I can highly recommend Ausbiz reporting. With that though, I'll hand over to Elliot and we'll get discussion underway. Thanks very much, everyone.
Thank you, Michael. Couldn't have introduced myself better if I tried, so really do. Now, obviously, we do have a great session all about the ecosystem. In particular, it's one focus on collaboration, which is something that we're going to see more and more as, even during COVID, we have seen online with that increased need, even when we can't do this. And so how do we catch all these segments? And then we'll also touch on some aspects, of course, that fintech naturally comes into. Before we get started, to ask our panelists to go through, introduce themselves so that we get a bit of an idea of who and their specialties. So we'll start with Mr. David. Just introduce yourself, please.
Hi, I'm David Jordan. I'm a RegTech interrupters that's involved in risk and compliance and financial stuff for banks and smaller financial institutions. Worked in Bangalore, European and American banks.
Mr. Andrew Davis next, please.
Yes, thanks, Elliot. Hi, everyone. I'm Andrew Davis. I'm an ambassador for innovation, which is a program to facilitate startups India and Australia to enter the other markets and to expand into. I also do a lot of work with the bank in the context of development programs and fintech ecosystems, particularly in emerging markets such as Africa. Great to be able to join you today. Thank you.
Thank you, Andrew. Nathan?
Thank you. So I'm Badri, the New Zealand's Innovations and Ambassador in Sydney. Working over here, especially in Australia, after Silicon Valley and Israeli community, Australia's set up startups, which we could leverage in terms of the risk-takingness. It's really great. Happy to meet you.
Thank you. And last but certainly not least.
Hi, Pranay. I'm Chief Executive Officer in SB, and I'm hardcore banker. The most one impacted by the fintech. I'm in Sydney for last 4 years, and I'm with this bank for last. And I say that I'm the person who has been looking the fintech with closely. Thank you.
Wonderful, thank you. I do want to touch upon obviously between both Australia and India in terms of fintechs, but I think it's important to start looking at the institutions and fintechs, so banking institutions, which we all know these new incumbents and how tech is being incorporated in the banking sector. And I think we might start with you, just given your experience. Tell us a little bit about the collaboration that you've seen in fintechs. Mr. Pranay.
There are the fintech collaboration has miracle in the industry. I don't know if I look at three area or three way the impacted the banking. One is that the existing product, earlier we used to for your drawing of the or for your mortgage loan, you meet your finance manager, your relationship manager, and so on. Done the process. What happened? The fintech and they've come into the picture as the existing product. Like in Australia we have the digital mortgage platform, certain invent of ATM, and then remote ATMs, and all these were early sign of the fintech. And gradually the entire process and entire product has gone for a change, and now we can see the financing or some other in that area. It has next one is the disruptive technology, where the all banking is no longer in the space. Now we are using Apple Pay or Google Pay. They are no longer a banker, but they're offering the banking product. So the three part: one is that innovation of existing system and procedure and existing product. Second one is that all together new product has emerged, and third one is the disruptive. They have killed the existing bankers. There is no brick and mortar banking is required, and everything is available on the app. So and then last one is that next generation, generation after me, you can see that new set of the banker. The banker will not require the banking knowledge what they were having. Banker may require banking knowledge. In addition to that, you should know that network designing, coding. If you have the coding, network designing, plus you have some knowledge of the banking, then only you can become a banker. So the fintech has not only transformed the process, delivery, but as well as the skill set which is required to be a banker. So overall, net, the fintech, after 1990, with the advent of the smartphone and all, the fintech, and I believe that from 2020 onward, the fintech will going to the next league, where you don't require a regulator, because regulator is also coming and watching you directly, going into your system, and as well as other ancillary services are also coming on the same platform. The regulator, banker, vendors, and all customers all are on the same platform, and that's how the open banking concept is coming up. But at the same time, we are very, very mindful that I believe that last 1 decade or so, more than 20% or 30% cyber attack has happened on entire banking platform, or 20% addition to that one. The people are not aware of whether attack has happened or not. The risk is coming up. It's getting manifold, and I believe that at the same time, where one side, when the delivery has improved, the customer experience has improved, but at the same time the challenge has also come up very, very well.
Just want to follow up on that one. Do you think that that's why we are seeing the likes of the Afterpays join in with banking, because they are wanting to get that banking experience? Do you see these, and we'll expand this question out to other panelists as well, do you see these partnerships being short-term before the fintech goes off with the skills, or do you see it being a long-term position?
No, let me answer. The partnership, actually the fintech and the banking is one area where everyone is a winner. No one is the loser. The fintech has earned their space. Banking has transformed. The customer has also transformed. Customer has also expectation has increased. I can say the fintech in the banking space or fintech in the space is one area where the everyone has gained, economy has gained, society has gained, and the financial inclusion is another area where the lots of gain has happened. So of course, collaboration has to happen. Collaboration is the essence, but at the same time, the collaboration has to happen with the equal level. It's not that very traditional bank and with the new bank, the collaboration has to be on identified area and the area which is going to add value to the customer.
If I could add to that, Elliot, I guess it's interesting in Australia, if you look at the landscape of collaboration between banks and fintechs, I mean, the positive thing is that we see banks in Australia actually experimenting, even more than experimenting, we see the banks pursuing many different dimensions to collaboration. So we see banks setting up innovation labs, taking equity in fintechs, partnering with them, running fintech challenges, doing trials and POCs, which is all very positive. What is quite rare, though, is where we actually see a fintech technology become part of the BAU stack in a bank and be offered or absorbed or used across the bank. So I think there's still room for improvement there. The good thing is, though, I do see banks more willing to make use of fintech services in a back office, middle office perspective. Probably where they're still a bit shy is something that's customer facing. So I think that's where there's room for maneuver. But the great thing is, banks are getting deeper into the fintech ecosystem. They're joining associations. They're being part of ecosystems. They're setting up labs. They're getting staff to be mentors and all of that. So it is evolving, but it's not quite at that perfect level yet. The Afterpay example you quoted, to me, is a reflection more about the banks working out how can they have a seat at the table to be part of really what is a whole new product offering that fintechs have created globally, which is the Buy Now, Pay Later offering. So the banks are really trying to work out, which is one of the reasons why Westpac invested in this technology from the UK that they're now deploying Afterpay, how they can be a part of that uptake and not miss out on that.
Mr. Balvanathan, given your experience, what have you been seeing in sort of people that you've been working with?
Absolutely, Elliot. So we've seen now in the market a lot of collaboration more than competition between banks and fintechs. Each of them bring to the table their own strengths about it. If you see fintechs to the table, they more processes, design, experience, and more how they are able to bring the cutting edge technology, the most important thing to the banks about it. And banks, what they give to the fintechs is the trust, what they have, the customers in them on that. I mean, if you take innumerable examples in the last 18 to 24 months, what you see in the market, like what Andrew was telling Westpac, they've invested in 10x technology, the company over there, into the digital space where they want to take. If you see CBA, they're going into Buy Now, Pay Later, Klarna-based company on that. Same with the Bendigo Adelaide Bank. You see they've taken the mortgage automation solution from TikTok and they've taken as a branding as Bendigo Express. So on, multiple banks are trying to see how they can go about it. There's another set of new digital banks coming into the play, like World Bank. So they probably combine both the traditional banks, like what Mr. Pranay was telling, and the fintechs on that. They're already coming into them. So this is an area where they are able to collaborate more and bring in the best of both the worlds over there. So there's the areas of where they can give in new business models, new partnerships. That's what banks are doing now currently. And there's going to be exciting times in the next 24 months.
If we do look at that 24 months, I'll just follow on from that. Where do we, which particular areas do we particularly see the excitement coming from? Is it with further collaborations? And if so, what sort of fintechs are we seeing onboarding both here in Australia and in India?
I would say in the area of more exciting, I'm seeing in the area of open banking, digital regulations, then digital. So these are the key areas which I'm seeing there's more traction among the banks. There's been seen where they want to more than invest. So if you see traditionally banks don't invest, go big bang and buy out the companies. It'll be a small form of investments where they do partnerships before they see how suitable or in their ecosystem they are before they buy out. Three areas which I see there's been traction currently. And because of the Royal Banking Commission reports, after almost like 70 odd recommendations, most of the banks are seeing where they can look at augmenting their capabilities, partnering with the fintechs and seeing how they want to go about it.
And if I could just add to that, sorry, if I may, and definitely echoing some of those comments, the big area that I see in Australia is in the area of RegTech, regulatory technology. Australia, there's a great piece of research that came out late last year that showed Australia was the third largest RegTech market in the world in terms of the number of RegTech startups coming to market. And that's an area where definitely I see the banks are willing to work with these startups and to deploy their capabilities to help them in the back and middle office to meet those compliance and regulatory obligations. And I think that's a lot of opportunity there that over time Australia can feed into India. Clearly Australia has a lot of sophistication about regulation and compliance, and as other markets enter that same level of compliance, I think the RegTechs in Australia have a great role to play on that.
And David, this might be a good time to bring you in. If we expand upon that collaboration and we do look to India and we do look at the Australian fintech ecosystems, what are you seeing between the two? Is there a cohesion? Is there conversations happening?
There's a really big opportunity of actually aligning two countries who have come from different approaches. So India's been doing a lot of work around trying to provide financial services to the greater population. And it's been very innovative and creative. What we find in Southeast Asia and India, it's more about the startups do something and then apologize to the regulators, where in Australia we go in and say, please regulate it first before we do anything. So there's a lot of creativity in India, and the examples like the India Stack is a very fascinating financial product in enabling a lot of facilities that Australia and US and UK actually don't have. On the other side of it is that Australia's got a very good security environment, survived the global financial crisis, has a lot of rigor and safety checks and processes and environments. And for India, this is a big challenge. I think it was about 18 months ago, it was saying there's about a fraud an hour in the Indian financial services market. So by bringing expertise from both India and Australia together, instead of sort of having Indian fintechs and Australian fintechs, actually did a lot more collaboration. We would actually have very strong products to take to the rest of the world. So I think this is sort of the area that's very important. But I think also to add to the environment is one of the challenges for the banks at the moment is the innovation really is about changing the business model. It's not about the technology. And what I find is a big problem at the moment is that the banks get very excited about the changed business technology, but as soon as they put money on the table, as soon as risk starts coming into it, they go back to where they're used to it. And I think this is going to be the challenge over the next 10 years, is to try and really help the banks to change their business models and look at the new ways of assessing risk.
And what would be some of those ways? Obviously, banks are pretty ingrained typically with their process and it's starting to now expand. What are some of the risks that they can start to analyze in different ways to improve that, David?
Well, I think the biggest challenge, in the Western world, about 25% of the population are excluded from financial services. That's Western world, US, UK, Australia. By next year, because of COVID, that could jump to 30%. Small business lending is a massive problem across the world. And all of this is because the way that we do credit risk is old-fashioned, it's outdated. One of the things that we're testing out in South Africa is to actually do lending without a credit report. and using psychometric analysis of people. Now, the problem in the United States is you can't get a loan without a credit report, and you can't get a credit report without a loan. So it's a nightmare for people to get into that environment. And if you think that in COVID, you're going to have a whole lot of people with damaged credit reports because they lost a job, not because of their fault. How does a bank start lending to people that are actually really good credit, but have had a damaged history? So these are the sorts of things. How does the bank now take away from that traditional way of doing a credit assessment and look at new ways of assessing that credit check so that we can actually lend to people that need it?
Just as I was about to ask him the question about how he as a banker is dealing with it. Look, we might keep talking about this topic, being the collaboration, particularly between Indian and Australian fintechs, and sort of looking at why why both can use each other's markets to further showcase what they can do in the space. And Mr. Badranathan, we might get your thoughts on that sort of idea of how both can leverage the other's marketplace experience.
Absolutely, yeah. So if you see, both the economies come up with each other's strengths on that, and leveraging more as a partnership is the name of the game. In political level, yes, there's been a great synergies between both the countries. In terms of the fintechs and the banking, what they have, yes, if you see, India is one of the biggest markets in the world, where it's a test bed for a lot of things, trying out products, how they want to go about it. Australia brings in the best of global capabilities in terms of the technology, in terms of the processes, how we want to take it. So the collaboration between both the countries or both the area banks in the countries or the fintechs, what you tell, it's going to be some of the parts is greater than that. It's going to become good. So if you see, there's been a lot of new startups coming out in India currently, specifically in these areas of mortgage processing, payment ecosystem, similar with Australia on that, which can co-create new solutions and take it to the customers. At the end of the day, customers are going to get benefited in both areas.
And Andrew, building on that, it is all about the customers, and particularly in what regard do fintechs have an advantage in that space?
Well, fintechs, I guess it's their mantra to be very close to the customer and have the customer in mind from the very beginning. So it's not unusual for fintechs to be involving customers in the product roadmap, in design sessions, co-creation, testing, beta trials, and of course, in many situations, customers become investors and vice versa. So there's a really strong bond that fintechs typically have with these, segments that they're serving, and so it makes them very close to the customer and gives them that, the ability to take a pulse check and to evolve their offering and pivot their offering, as required. So that's the beauty of it. That fintechs are very good, almost at that last mile connectivity, into the hands of the customer, onto the screens of the customer, and that's often one of the appealing aspects that catches the attention of banks, because banks struggle typically with that level of customer intimacy and penetration.
And look, I will open this up to the floor. When we do talk about that penetration, obviously there's a lot of fintechs at the moment fighting for the piece of pie, I guess, that the banks don't have. And what do you guys think in terms of consolidation amongst the fintechs themselves before they even get to the bank collaboration stage?
Yeah, I think that's really important. An example in the RegTech space, the banks don't want to deal with 20 different RegTechs with 20 different platforms. The more that they can have a single platform with a range of products, the more that the banks are going to accept it. So I think that creating a platform where there's multiple fintechs working and providing a different slice of the pie, but provide a one-stop solution to the banks, will find a greater acceptance to those who have a single product in isolation from others.
Absolutely, yeah. Just to add to what David was telling, yes, there's been a talk currently among multiple fintechs. Both could be operating in the wider end of the spectrum, how they could collaborate with each other and take as a common solution to the banks currently. So if you see, there could be a company in the area of digital human, unique, and then there's something in the personal financial management area, company Maniga, how they collaborate with each other and provide a common solution to the bank. So in the sense, they could give a solution where banks could get in a personal financial management, a digital operator or digital human providing it. So that's the game which these guys are going forward towards it. And banks doesn't need to deal with multiple people and multiple operations about it. They just need to deal with one vendor and one service offer service to the customers.
And Elliot, if I could just add actually a slightly different perspective on that, I think one thing that is working against consolidation, and when I think of consolidation, I kind of think of one fintech buying another or merging. I think, unfortunately, on one hand, there's too much capital flowing into the startup ecosystem, which is really pushing along a lot of single point solutions or single use case solutions into the market. But I think, therefore, the opportunity is almost like at a platform aggregator level. So is there an opportunity for another organization to sit over the top of several fintechs and to connect to them at a technical level? And in Australia, we've already seen that there's a fintech based out of Melbourne that is basically providing a platform service to banks to be able to access a range of services from a whole raft of different KYC, AML providers, but do that through a single point of connection. So I think there's consolidation potential at the technical level, but I think at the business structure, entity, capital level, there's still too much heat in the market to happen actually.
One of the things, just to add to that, is one of the hard parts is to do enterprise solutions. The investors aren't really excited about it. And when you go to a bank and say, I can provide a solution that solves a problem from here to there, the banks become uncomfortable. But the banks are sort of like, I'll fix this problem now, and I'll fix that problem there. So that's the problem. We actually have an environment where the banks and the investors are actually encouraging single solutions rather than actually starting to look at more integrated end-to-end solutions. So I kind of say it's like before SAP kind of made ERP fashionable, you'd go out buy a payroll system, you'd go out buy general ledger and an asset ledger. Now today you wouldn't do that. You just go and buy an ERP solution. And at the moment we're in that same environment now for fintech and regtech, where we're buying bits of the puzzle instead of actually looking at an enterprise solution.
And do you think that's partly, as you said, it is driven a lot by the capital that's out there? Do you think that we're about to see a slowdown of that, just given, and might be not a good time to bring up how COVID will impact it? If it will speed it up, it will slow it down. But do you think that coming out of COVID, there will be some people that are not so reluctant to part with their cash, I guess, investing in startups?
I think it's kind of challenging talking to investors in the US, in the UK, and Australia. I'm seeing different flavors of it. There's a lot of investors with dry powder that went out and raised a lot of cash before COVID, and a lot of what they were going to invest has disappeared. So there's that situation now that they're having to rethink the strategies. I'm finding there's a move away from Silicon Valley, which has been more about the sort of individual products, and starting to look at other areas like New York or Texas or Utah, and they're starting to have a different perspective. So I think we're starting to see a shift of it. I don't know how quick it will occur there.
Just from a different perspective, I think, Elliot, what I'm seeing from speaking with the multiple venture capitalists, in COVID times, I think most of them were holding back the money and not making big bang investments. So I'm seeing down the line, probably this year, they're going to start making investment in a lot more areas where they think, because they're going to get how they're going to invest the capital which they have currently. And these are the fintechs which is going to be hot in the market. And some of them have evinced interest in looking at these new fintechs, how they can go at part of ecosystem and taking it to wider globally on that. Probably take one of the fintechs in Australia and take it look. So that's the game which these guys are thinking how we about it. We having something like a co-innovation network, and we interacting with a lot of venture capitalists, private equities, and seeing. So that's the vibe which I'm getting in the market.
And Elliot, just from my perspective, I guess during last year in Australia, I did see a number of failed raises in the fintech space, largely down to timing. And in fact, in some instances, a failed raise also meant the fintech itself had to shut up shop. We did see last year many investors focus any capital they had into follow-on rounds to support their existing portfolio, rather than to bring on to invest into new deals. This year, though, I see that there's some return now to kind of pre-COVID, not to the same extent. I think there's still a view that quality of deal is important rather than a scattergun approach. And, you know, I think it's the WeWorks and the Zingers and those types of situations that have caused people to realize that you don't just throwing money at something doesn't mean you achieve an outcome. But I think definitely there's a return. As an example, I just had a session last week with the Mumbai Angels Association, and they were very keen to identify investment opportunities in Australia. So I think we're seeing a lot more now global crossover of investment flows from one market to another.
Let's talk about that. Actually, it's a great time to talk about how the collaboration of investment, the collaboration of money can flow in between not just Australia and India, but I guess also the broader Asian region. And are we seeing a move in between India and Australia particularly? Is that a stronger one? And why is that a particular movement? I don't know who wants to answer it first.
Maybe from my view, they're sort of trying to raise capital. I think the difference is like an Australian market is a very risk-averse market. I like it that if Henry Ford came to, let's say, build 40,000 cars and then we'll talk to you, and that's very hard. Where in the United States, you find that they're more like, tell me where you're going to go and then invest on that. The problem in the United States is that model has become practice where it's how you play the investment model rather than actually building a business. So I think it's interesting coming out of what I'm finding is the Australian investors are looking for innovation out of India. And I think Indian investors are actually looking for some different types of investment in Australia. So I think you'll find like, Australia's got a very high, big reg tech investment market. India's got a very high payments area. So there's now an opportunity to actually diversify your portfolio by looking at different markets and different technologies in different markets.
Absolutely, yeah, David. So when you look at the two countries, what they look at each other in terms of the paradigm shift which is happening in countries, you see a lot of synergies which I'm able to see, because the fintechs or companies in Australia are able to see the value and the returns when they're looking at investing in India in terms of the capital appreciation, what they're looking at. And vice versa, the companies in India are able to get the best of the global technologies in terms of artificial intelligence, then augmented virtual reality and digital human, and how they want to take it to the other parts of the world on that. So Australia is one of the classic cases where the company in India, if they want to look to expand globally, the first port of call for them, what they can look at it. And that's the classic regulatory view of capital currently. So we're going to see more of action down the line in this area.
And does anything need to change, I guess, from either a regulatory side or an investment knowledge side, or does anything need to change in either one of the countries to make that flow easier, to make that connection and synergy better?
So currently a lot is being, both the governments, Prime Minister Modi and Prime Minister Morrison, doing a great job in terms of the moving away the obstacles for the trade, how they want to do about it. They've done a thing. And we've come a long way from previously. Every year we've been doing great incremental steps to making it even better in terms of the trade. and the synergies within. But there's always, you can always tell the road is wide ahead. Yeah, always. Yeah.
And my view on that, Elliot, is I think there's in the fintech sector in Australia, there's still a lot of naivety about India as a market for growth and potential. Most fintechs are still looking into more traditional markets, be it North America, UK, Europe, and then, of course, now more and more Asia. So India is often overlooked just because I think there is that naivety and ignorance, and yet India is such a fantastic, significant market. It's also potentially a gateway into Africa and the Middle East. So I think there's an opportunity here to raise that awareness and understanding.
Yes, I think people underestimate that market. I mean, if you look at Grab, which is the Uber in Southeast Asia, and basically over 6 years, they turned into a digital bank with 700 million customers in 8 countries. And that's pretty good even compared to the United States in that. So I think it's a volume market that Australians haven't really understood.
And in terms of that, I guess understanding, what are some of the biggest barriers then, coming back the other way? So, we've just discussed sort of the Australians going over to India, but are there any barriers that is stopping the flow back into Australia from India?
I think the challenge is building trust. I think that's going to be a big challenge. I think also that there are the Indian stack has made things. It has created a lot of opportunity for fintechs in India that's just not available in Australia. So basically, a lot of those channels that Indian fintechs had advantage of isn't available in Australia. So they need to look at different ways of doing things.
And what are the moving beyond that? What are the particular differences in both marketplaces that people can learn from each other? So, as in, say, the Australian market, we've got a huge buy now, pay later segment. Would that same segment translate well over to India? Or what are the particular needs of the Indian market for Australian fintechs?
Yeah, again, I think it's cultural understanding. I think that's probably the biggest one, and how you manage risk and manage multiple languages. India doesn't have one language, so you sort of really go into different states, and you're having to deal with different languages, etc. I think it's this micro business model that is in India that we don't have in Australia. So we sort of say we don't deal with a customer if they don't earn $100,000 a year. That's not going to fly in India. So I think it's really understanding the types of your consumers, and rather looking from trying to make money out of less customers. Sorry, making more money out of less customers. You're making a little bit of money out of a lot of customers.
And if I could just add to that, Elliot, I guess from a sector perspective, I had mentioned RegTech, I think, is an area where Australia can contribute to India just because the level of sophistication and maturity here is greater. I think another sector that has potentially a lot to play in India is InsurTech. In the Indian national budget just a couple of weeks ago, there was a change to the FDI levels that is allowed in India in the insurance space. So they're wanting to see more foreign direct investment into insurance, and I think even at a behaviours level, we see that a lot of businesses in India typically don't have insurance. And things like cybersecurity, insurance, and so on. And I think, if you look at the InsurTech market here in Australia, again, it's quite well developed. There's an InsurTech association. There's a lot of InsurTech startups. The incumbents also are quite actively engaged. So I think that also represents some degree of export opportunity from Australia into India.
I would look in the area of the risk taking and the intellectual property. That's something where India's come a long way from how we look at the intellectual property of the products and the patents, what's being developed over there. And currently, because there's been a enforcing of the regulations a lot in the area, a lot of new patents have been coming out, which Australia could leverage in the area of the fintech, multiple areas of the financial technology space, what's happening. Each process can be subdivided, and we find some niche areas from a tier 2 city. They provide a new type of technology which can be useful to the whole lot of banking ecosystem. So that's something which can be leveraged now on that.
Now, one of the other things when we're talking about that banking ecosystem is, of course, how many people are impacted by the banking system. And it's sort of that topic of financial inclusion, I guess, which isn't just a problem in India, but it's also a problem here in Australia. And what can both countries provide to each other, I guess, to sort of help more people be touched upon by financial industry?
So I think if I can say something there, I think one area is how can you support startups and new propositions coming to market faster. Obviously, there needs to be a strong element of trust and security and reliability. But how can we make sure that regulation, adequacy, and other requirements don't get in the way of that? And in some markets, like in Australia, we know that there are regulatory sandboxes. They're not always that well used, or they're not that well defined. But I think definitely, we can see there's a strong appetite in both markets for consumers to be wanting to make use of new services and to download apps from brands they're not familiar with. But of course, we need to make sure that ultimately that that they're not impacted at a financial hardship and level. So I think there's getting that balance right, and how do we make it easier for new services to get into the market?
Yeah, I think the problem, and banks being conservative and risk beasts. The problem is when you come to talk, the first thing that they do is it's always, well, what could go wrong? Why not? Instead of looking at the opportunity, they look for all the problems. And good brainstorming is you don't start looking at the problems first. You start looking at the opportunities. Once you then identify the opportunities, then you start sort of becoming the pessimist and start looking at the risks. And I think just having that slight change around could help to move innovation into the banking a lot quicker.
I'm seeing currently a sea change in how the banks look at the branches in both the countries on that. How the branches can be, the old type of branches can be remodeled or reimagined to serve the customer even better. I know there's going to be some section of the population who very comfortable going to branches about it. Absolutely, no doubt about. So they need to cater to those. But in other areas, what are the new areas? What are the test beds where they can look? So most of the big four banks over here, they use some branches as a social experiment processes for test the new technology, new processes, how they want to take it to the customer as a live experiment. So that's something which is aiding them. In one of the key things the big four banks are looking in the area of customer experience, how they can augment it, make it even better. That's a ever-changing process which they're going about it. And in this endeavor to make it even better, they're partnering with a lot of fintech players across the world, not just in Australia, and how they can bring the whole lot of peace over there. So that's something you're going to have or it's already in some banks you have your bank loan origination process is going to be in minutes on that in terms of the digital human and other technologies, what's happening. So that's the direction all of them are traveling.
I think just to add to that, one of the problems though is that all the fintechs and all the banks tend to go back to the safest customer. So what we find is, full-time employee, everybody wants them. But what you would find, like in Australia, that population now is moving to only about 50% of the workforce is full-time employed. Everybody else is in a flexible workforce. So basically you have every fintech, every bank all sitting there only wanting to talk to the other one half of the market and ignore the other half of the market. So one of the challenges I think for banks at the moment is to how to not just solve the standard one, but how to open up those new markets, because that's where the new opportunities are and where the margin business is. Because at the moment, because everybody's competing with a smaller and smaller market, they're losing margin because they can only compete on price. When they're ignoring another half of the market where they're going to get margin, those that work quickly into understanding that are going to find that they get greater growth and more margin in opening up those new markets.
Yeah, and it must be said, fintechs obviously can be a solution to the financial inclusion, but that there is also the other argument, which is of course as banks, you mentioned before, then it's when they branches will always be a thing, but banks are increasingly moving away from them because everyone can do what you can do typically in a branch on your mobile phone. And is that a problem that the fintechs will need to address themselves, or is that something that they'll sort of be dragged into as they do those collaborations with banks?
Look, from some of the discussions I had in the UK a couple of years ago on open banking, one of the challenges that we're finding is that a lot of these fintechs, people were playing, so they would put a small amount of money in it and play around with it, and then they put their big deposit in one of the big banks. And so one of the challenges that we've also found, and the UK brought out one of the first branchless banks, and within 18 months they opened up a branch because people still needed to see the bricks and mortar. So there's a little bit of challenge still. Whilst fintechs creating a nice interface on the phone, when you put your money in there, suddenly they want to see something a little bit more solid. And I think this is still a challenge that hasn't quite been resolved.
And would you, David, have any suggestions as to what can be done to sort of help kickstart that process?
I think the interesting one that maybe is going to come around is this banking as a service environment. And, I guess as we're Afterpay working with Westpac is starting to fall along that line, where maybe the bank is providing an underlying foundation, and the fintechs are actually services around that bank that are actually providing the new innovations and new technology. So they actually work in a different way.
Does anyone else have any
Yes, and
sort
I
of
think
thoughts?
just to add to that, I think I think partnering with the bank also adds to the credibility and the trust factor for the fintech. So to the degree that they can co-brand or jointly market, that definitely gives a lot of uplift to the fintech. And so I think, that's another, as benefit of those types of arrangements.
And what else, banking as a service, sorry, go.
Oh, sorry. What I was just what Andrew and David were telling is, at the end of the day, it all boils down to the trust and the value and the differentiator which a fintech brings to the ecosystem on that. That will ensure that whether they are going to be a fly-by-night operator or they're going to be with the bank for a long period of time.
And when we look at banking as a service, I would argue that most general consumers aren't really too aware of what it is, or indeed open banking. Do you think that's a problem that will need to be addressed by fintechs both in India and Australia, or is it by something that's more industry focused and the general consumer who will be impacted by it probably doesn't need to know the ins and outs of it all?
Probably from my point of view, I think it comes back to, are you solving a problem? And I find still there's a little bit of technologies driving the innovation instead of solving a problem. So as I was talking to one CEO of a financial institution who's saying we need to get into fintechs, and I said, there's no use giving a mobile phone home loan application to a couple who can't get a home. The technology is not going to solve the problem. How you help them to raise a deposit, that's actually going to be the thing that solves that problem. So it's really getting the alignment of solving the business problems that's going to really make a difference for the fintechs and the banks.
Yes, I think definitely there's a risk that fintechs put a lot of emphasis on product design and capability, and I think there's often a risk that they bring to market something that looks great and works very well, but its real purpose and benefit may not be that well understood by the average person in the street. And I think open banking falls into that category. That it opens up lots of potential in terms of how you export data and what you do with that, and the benefits in terms of shopping around. But the risk is that all of those capabilities will sit there, and maybe in 5 years from now, it's only 20% of the population who know that and are making use of that.
That's right. I mean, it's always the case. I mean, for your question, Elliot, the common man should know how open banking and how the ecosystem play works. That's left to the experts, the banks, and the fintechs providers. It's like a classic case of you see a good car over there. The layman didn't know how the nuts and bolts works over there. Left to the experts and the mechanics over there. So in the same way, even in an open banking scenario, which is currently vogue, and we have some deadline in the market, what's been the banks have to follow, how each ecosystem brings into play. Suppose you're a Westpac customer, you're going in a Westpac bank. Can the person who's buying services, can he go there and with his credit score or with the credit history, what he's got, can he get a Telstra or a Qantas Airlines tickets on that with a good amount of discount? So that's the level of data which these guys are playing with in an open banking forum, which once it's completely deregulated, everyone has got access to each one's data, how they are able to utilize it for their, in the business about it. So that's the thing which each one have to bring it. I mean, even in a classic case of any big four banks about it, if they are able to bring in the personal financial management, like what David was telling, if the person is not eligible to receive a home loan, how much amount of selling, you are not able to do anything. But to help them save and bring in the mentality of saving, if the banks could bring in a PFMs about it and bring in the change in the behavior of the people, and at the end of the day, he's going to get benefited about it. So that's something most of them are going in that direction.
And what are some of the continued innovations that I think that we think we'll see from fintechs to further enable in that development? You know, is it sort of in the AI? Is it in the blockchain? Is it, or is it just on platforms like using mobile phones more? What do we think we're going to see in terms of innovation for it?
What I'm thinking is, at least what I'm seeing in the market and from the people, what I'm hearing is artificial intelligence is going to be the bedrock on which the new technologies or the new solutions, the business applications is going to be framed. And this is going to be, and all these technologies are not going to be not coordinated. All are embedded with each other. So the blockchain, what I'm seeing is going to be a main thing. The general ledger, how they bringing in the whole ecosystem. If you want to see the core of the open banking is going, how the ecosystem play over there on that. And blockchain is one of the main areas how the whole ecosystem can bring in over here. So the example is a person buying a person has got probably a 100,000 loyalty points in one of the airline. You want to take it to the Woolworths, use that. That's where a blockchain comes into the play. They're bringing the whole ecosystem partners over there. And I think from my perspective, artificial intelligence and the blockchain are going to be the bedrock on which all the other technologies are going to be embedded in it.
Yeah, I think one of the things that's an example was what Robinhood did in the United States just recently, is where the small person feels that they actually have an ability to do things that they didn't have beforehand. And I think that enabling where they can have control in investment, that they have a better understanding of how they can do things with banking, that's probably going to become a lot stronger over the next couple of years as well.
Yes, I agree. Definitely on that. It's all about providing more choice, understanding the customer, using the data better to do analytics, and to really do almost like segments of one. So how can you offer a very bespoke, targeted proposition? I think that's where, and there's a lot of technology that underpins that, but I think that's where fintechs will do quite well.
And to what extent will that, I guess, further innovation, particularly if we are looking at blockchain, is that a case of they'll need further investments to get there for the most part, or is those partnerships with banks where we look back at the collaboration going to help them get there faster?
So banks, you're right. So banks are not going to go for new technologies, how they want to do it without getting the underlying business problem, what they're going to solve. So the fintechs are going to sell to the banks. What is this going to solve in your ecosystem on about? How are you going to get more 10x customers? And how are you going to change your business model on that? Only then they're going to be taken up by the banks. Otherwise, I've seen, just with new technologies, without actually showing what it business problem itself, it might not cut eyes over there. It would be like a wastage of capital investments.
I think one of the things that could be more useful, no, Society General Bank has been doing a lot more of this, is actually putting business problems out to, a little bit like the hackathon sort of thing, but to actually say, look, we have this business problem. What ideas have you got to solve it? Because the problem is for the startups is a lot of them don't actually know what the real business problem is. And for the bank, they don't know what the kind of innovative ideas that could be coming through. So there's sort of, I think Society General had some quite good opportunities from doing this thing of putting a problem to a group of people and seeing what ideas came out of it.
And in fact, just on what top of what David said there was a bank in Australia about 18 months ago that ran a fintech challenge against a defined problem statement. And they actually said that they would like to see fintechs join together to offer a holistic solution. And the outcome of that challenge is that they've partnered with 3 fintechs who actually joined their capabilities together to address that business statement. So that was a great outcome.
And do you think, that's a good example there of fintechs getting together, but, we've also discussed regtechs, we've discussed insurtechs. Do we think that there's going to be sort of that merger happening of fintech meeting a regtech, joining together and then going to market for further collaboration with a bigger entity?
I don't think it comes naturally. I think sometimes it could be a bank that drives that, or it could be market conditions that drive that. I think fintechs are so almost singly focused on their own capability and, rolling out the next feature and thinking about cash flow. Even though they may be sitting in a fintech hub surrounded by lots of other great fintechs, it's like I said, it doesn't always come naturally. But I think over time, will we see more of that, definitely.
The lone eagle syndrome, I think, is the way of describing it.
Yes.
But do you think in general as an industry, there certainly has become more and more recently, we're just seeing it here in Australia and more the headline names, I guess, of the 86-400s. We've already discussed the Westpac deals. Are we seeing there's a greater trend and a greater maybe acceptance among the tech industry that there is going to be some consolidation, some collaboration to get the goals that are best for everyone?
I think so. That's just, I think they think it's somebody else that should do it.
Absolutely. We've seen some great stories coming over here. The World Bank 86-400 was there. Yeah. So that's the thing. And most of the big fours have their own the fintechs which they are operating over there. They have as a subsidiary new area on that, which will have a different business model on that. But the only time will tell how they can embed into the ecosystem.
And just to add to that, I think what's interesting is that, if we look at what CBA is doing in Australia with the establishment of the X15 Ventures model, that's very much a corporate venturing program. So they're basically creating their own startup factory. Of course, on the back of investments that they're making and, market opportunities and business problems they're trying to address. So here's a bank, really saying, well, we're willing to put money in to back a founder, to back an early stage business, to help them to commercialize and come to market. So, there's a collaboration in a way that's happening almost like at the PowerPoint stage for some of these startups. And I think that's very exciting to see.
Yeah, but to add to that, the problem then comes back to the traditional business model, because that venture then has to be sponsored by a business manager in the bank who says, that goes wrong, there goes my career. So they go very risk averse in assessing it. So then the problem is you'll see that X15 ventures are very conservative ventures instead of looking at a little bit more of those exciting ventures.
Mm-hmm. Fair point.
Well, and if we do talk about business models, obviously startups and smaller tech companies have one way of doing things. As we've discussed, banks are very risk adverse, particularly here in Australia. How do you solve that business model? It's not really something that you can sell to a bank. You can say, here's my tech. You can't really be like, here's my tech and here's my business model. How do we get over that hurdle as we move forward?
I think it's going to get driven by other players. So if the banks don't manage it, I think I like Grab and what it did. I mean, basically, here's an Uber organization. It identified with 80% of people in Southeast Asia didn't have a bank account. So Grab created a digital account, and suddenly now they're providing loans to people that've never had a bank account. So now all the banks are sort of rushing to try and get onto Grab because Grab that profile. Alipay and WePay, I think, cost the Chinese banks something like $20 billion in transaction fees in 2005. So I think maybe outside players that are going to take the mantle if the banks don't solve those problems is going to drive some of those changes.
I just saw a headline a few days ago that I think IKEA bought into a bank in Europe. So yes, I think definitely where we have these strong brands and well-developed customer bases in other sectors, it's going to be a lot easier now to bring financial services to the table into that community without having to be a full-blown bank, particularly in emerging markets.
We've also seen some fintechs actually try to buy banks in Australia as well, small credit unions. So basically, if the banks don't change, they will get overtaken. It might take a while to eat the big bank, but they will get there.
I agree there. I mean, like, banks are invariably changing their business model now, the big four banks and the other ones. The new fintechs over there have come into the market. This creates invariably a peer pressure where they've changed the business models about it in terms of the customer experience, what they are offering to the customer in terms of the products. But for the collaboration between a fintech, I don't think any bank at this stage would go for a full-fledged M&A or for a fintech company. That's probably not their model on that. They probably would look at a partnership model to start with and see how it goes, like similar to the Bendigo and Adelaide with TikTok, the mortgage origination company. And then you have your own product launched and see how it goes before you take over that. I think that's sort of the ecosystem play which we're seeing down the line.
Now, guys, I am aware just of the time that we will be wrapping up shortly, so I just want to sort of get some final thoughts from each of you. So, no need to rush, just want to get some sort of final thoughts about what you think is most needed. So something actionable, I guess, to increase collaboration, both between fintechs and banks and Australia and India's ecosystems.
I think a lot more work between the regulators. I think if the regulators to work with the other, Australian and Indian regulators, and learn from each other and actually explore potentials to take a little bit more risk. I think that will open the door. The banks are in Australia are very nervous of the regulators. And most European banks, when they've got billion-dollar fines, it's almost like the first thing in every decision is we can't have a compliance breach. Then we look at profit. And if we've got that sort of framework, it makes it very hard to innovate. So I think there's the Australian regulators need to learn how to free up the market a bit more. And then also work with the Indian markets who are looking at new ways to regulate the fintechs.
And on top of that, David, I think the other opportunity, particularly for regulators, is I'd like to see regulators also embrace fintechs into their own businesses. I mean, regulators are corporations, they have staff, they use technology, they have business processes. They themselves also should be leading the way and showing to banks that it's okay to partner with fintechs and to make use of these capabilities.
I think during the COVID time, the last year, I'm just telling we're out of it now, but even though a large part of the world is still struggling over there, both the governments, India and Australia, have helped their banking systems, handheld them, and both of them are relatively unscathed in these troubles on that. So this is something, if we can utilize this going forward in terms of, yes, regulatory, as both Andrew and David were telling on that, how they can use this to build on top of it, and that's where the great collaboration comes between both areas.
And the other thing I'd like to add, Elliot, is that we often see trade missions going between different countries, including Australia and India, and of course these trade missions usually have startups going to explore the other market in terms of growth potential. I think what would be really great is to imagine if we could have a trade mission of Indian bankers coming to Australia to look at the Australian technology environment and to try and identify partnership opportunities with fintechs into this market, and vice versa, Australian bankers going to India. So rather than the startups doing the traveling and the startups trying to, tout their wares, I'd like to see the bankers doing that.
Absolutely. I think that's sort of very important. Make sure it goes both ways, and certainly the bankers tend to have a little bit more money to do so. Guys, just before we wrap up, I do just want to, for anyone that has been listening, if they wanted to get in contact with you about any more sort of details, how can they best do it?
For me, Elliot, people can find me on LinkedIn and message me there and connect there. I'm very happy to do that.
Same with me, David Jordan.
Same with me. When my LinkedIn profile, you can reach out to me anytime.
Wonderful. Well, I think that's pretty much brings our session to a close. We, as part of this, obviously they are trying to, the trade missions of India and Australia are trying to get some ideas together. So I've taken down, obviously, your guys' suggestions so that we can take it back to them and hopefully everyone can work together to build a bigger and certainly better ecosystem. But thank you for the three of you for staying on the call. Unfortunately, we lost somewhere along the way, but really do want to thank you guys for your time, for your insights. I will double check to make sure that there's no questions, but otherwise, I think we'll call it a day.
Thank you, Elliot. It's been a pleasure to join.
Yeah, thank you. Nice to meet you all.
Thank you, Elliot, Andrew, and David. Thank you.
There's no questions. All closed.
Share the light. We share the land. We share this journey. Join us for the adventure. Our country is waiting for you.